We got in a quarter, we've got Powell on deck, we've got a potential dock worker strike, we've got elections, and we got non-farm payrolls. This is all ahead of us for the week of September 29th, 2024. Let's get into a little weekly outlook, shall we? My name is Josh. I'm the founder of TRADEWITHPROFILE. We're a skill development firm, and part of the skill that we develop is the ability to look at auctions, specifically futures markets, and arrange that information using profiling tools. And so we're going to do that over the next 10 minutes or so. We're going to look at the week ahead across a couple of products of what we're looking to expect, how macro catalysts might impact that, so that we can be in a position to look for some playbook opportunities. So with that, let's jump into it, shall we? So we're going to start with talking a little bit of a macro narrative. So narrative is important because it's just setting a context for what's the environment that you believe that you're in. Now, it's a narrative, it's a story. So you have to be open to that it can change and it could not be right. But here's my current narrative, just so you know contextually kind of where I'm operating from. First, everything that we're doing in terms of driving equity prices higher is hinging on and hanging on rates and what Powell will say. We got a rate cut, will we get another one? That makes non-farm payrolls at the end of the week, as well as Powell's comments this week, pretty important. So expect those to be pretty catalytic. What's driven us up aside from rates this year has been the AI trade. And we're starting to see movement out of the A-class names in that space. Those are struggling, and it's the B and C-class players that are there. That tells us that sector, the semiconductors and the AI trade is struggling. So we're running out of things to really move markets higher. We're also in a window of a blackout of corporate buyback. So companies buy their stocks back. This is pretty persistent bid throughout the year. There are a couple blackout windows around earnings. And so we're in one of those right now. This week, we get information about whether dock workers on the coast will go on strike. When it comes to catalysts and their impact and even geopolitical events, one of the things that I always encourage traders to think about is what actually will impact the U.S. economy. Dock worker striking will impact the U.S. economy. So if that is not resolved, this is a thing that can weigh on the whole narrative of the market and sentiment, which could take prices lower. Also, we're in the waning stages of just several weeks out from a general election, which we're really seeing that risk underpriced, meaning that as hedgers come in and realize the risk of that can also take prices lower. So that combined with we're just in a typical, even if it wasn't general election, even that all of these other things weren't happening, we're in a window of weakness seasonally, structurally from now until the election. So be mindful of that. We're more open to the idea of lower prices and equities. And so that is, kind of the context of what we're looking at. Okay. Next, let's look at the calendar and get a sense of what the week ahead looks like and where we're going to be. All right. Let's start with Monday. We've got PMI right after the open, and then we got Powell speaking later in the afternoon. That's going to be a pretty significant event. Expect markets to kind of just chill out once we get there, and then pick up after Powell speaks. Tuesday, we've got manufacturing data, number of those at B period. So this is after the open. Typically, whenever I see those stack, I'll wait to be active until after that. If I'm looking at equities, we do have a Fed speaker. Wednesday, we have crude oil inventories, so be mindful of that. We've got more Fed speakers in play. Thursday, jobless claims. So look, there's before the open, right after the open, 10 o'clock. Those will all be good things to wait for and let the auction develop. You have a much better chance of being on the right side. And then Friday, we have non-farm payrolls. So Powell early, this Docker strike, and then non-farm payrolls at the end. Okay. Let's then get into looking at what we're expecting in terms of market opportunity. And whenever you're looking at a plan for the week, one of the things you're always asking for is what direction is the auction attempting to go and how good of a job is it doing at that? So as we look at these products, these are the two questions to keep in mind: is what direction is the auction attempting to go and how good of a job is it doing it? And then the key principle around that is a reminder that not every price is actionable. So not every price and every time is actionable. Some prices are more important than others. Okay. All right, so let's jump over to the charts and start taking a look at what we got in play. Looking at the VIX, this is related to the comment about things being underpriced from a hedging standpoint. So we've had really nice move higher throughout September, new all-time highs. We keep watching this 560 area in the SPY, equates to 5,600 in the SPX. We're above the FOMC from the September FOMC, and also August and also July. Here's what I mean by the underpricing of the risk. Notice how of all these durations of the VIX, they're all stacked in a normal curve. Nothing is inverted. So all these numbers are negative, meaning that shorter term options are priced cheaper than longer term options. This is natural because longer term, further out you are, the more potential, higher premium. Okay, so but there are periods where we see these invert. When they invert and when they all pinch, as was the case back here at the beginning of August, that's a signal that everyone's pretty fearful. I'm anticipating that we're going to get to something like that leading into the election, which would lead to lower prices. And this is a function of option reflexivity or option convexity that allows, as people buy puts, then dealers sell puts, and then dealers sell futures to offset that, and that takes us lower until we get everybody hedged up, and then we can roll. Where that might take us? That could take us certainly back to 560. It could take us all the way down to 545, leading into the election, and then looking for a big rally into the end of the year post the election. Right? That's just kind of structurally what's showing up there. Now let's talk about the S&P 500. And let's talk about last week, and let's talk about this week. Okay, last week, pretty big week. I mean, the week prior, pretty big week. Expected higher prices again this week. We did get those one time frame higher, and we were successful at pulling value up to us as well. So where we have the 5-day is here. We do have the 20-day back here at, or did have the 20-day at 5,700. That's now the 90-day, and then we have the 20-day here. So that leaves us in a spot where we're doing a good job. So this is how good is the auction doing? We're doing a good job of pulling value higher, but there's also sitting in a position now when you have value and price all in alignment that you're looking for that next move. And this is where, given that we've pulled value higher, we're looking for a next move, but all of the things say that move could come to the downside. That sets up the stage for a larger move lower. So in fact, that's kind of what we're looking for this week. If we can get below 57.60 and keep an eye on 57.90 as kind of the key pivot for the week. But if we're below that, then we're looking for a move back toward the weekly expected low, which is 56.81. So we could be easily back to 5,700, could see 56.81. So that's kind of the key objective to the downside this week. To the upside, if we're able to hold here and actually make a move higher, let's say Powell comes out and says, hey, we're going to get higher rates, or there's something that says that we'll get more rate cuts, then we could certainly be pushing higher. You know, where would that be toward? That would be toward the 5,900 area. So 58.96 is the expected high. And I'm getting that from looking at the quick sheet here. So you can download this and get a sense of where those expected ranges are. So those are all predicted by the market. So 70% probability that we'll stay inside of those highs and lows. But overall, we're looking for the week, we're looking for about 153 points, all right, from 57.88. And your key pivot for the week is at 57.90. So we're going to start below that price and look to move lower. Next, key price to support would be 5,700. Okay, so that's the ES overall for the week. Watch that 57.90. What are we looking for to start the week as we come in? It was a normal variation lower day on Friday after the auction started the week higher. It then failed back through halfway. So if we're below 57.90, we're looking for a test down toward the 57.40 area. Mondays can be a little more trendy. All right, so be mindful of that. If we open in range, look for a tag up to 57.90 before push to new lows toward that 57.40. If we gap, looking for 57.40, failure would come back up to 57.80. And unless we can get above 58.12, if we can get above 58.12, we can challenge last week's highs. But unless we can do that, we're looking for prices to the downside. Note that we are testing and very close to test that trailing FOMC VWAP. So this is the average price from the last FOMC that's been supported to the auction so far. If that fails, that really opens the door for the auction to move. And as we look back to that 5,700, that's back to the scene of where FOMC was. All right. So far, we're holding above that. This is also why those comments from Powell are important. That could take us right back to that spot. So looking for lower prices on Monday could really start to slip if we get below 57.50. You can see that's where the swing bias is. All right. Okay. And overall, we're back into a balancing range. We attempted higher, and we get at least looking to the bottom of this range, and then we'll see if that tests and goes back this way or if it breaks. All right. That's the ES. Let's look at the NASDAQ. Okay, pretty similar story overall from the NASDAQ. Overall higher for the week, pushed higher early in the week, and then failed later in the week. It's a great way to think about markets when they open. If they move higher early, the fade comes later. If they move lower early, the rally comes later, is typically the way that these behave. We did push away from the 5-day, but now we came back to the 5-day towards the close. We're also coming back to test that trailing FOMC, which then sets up the stage for us to really watch 20,073 is our key reference for the week. Okay, we do have 20-day is significantly lower, so 5-day is the key. If we're here, we could balance more and pull this up, but most likely what happens if we get below that trailing FOMC is that we start making our way back to the scene of where the FOMC breakout was, which that actually puts us, that's where our weekly expected low is to the downside. So if we're below 20,075, look for a return back to 19,700 for the week, or we could balance and try to pull those together. If we rally early in the week, look for them to come back to this price, because that would take us up away from composite value. We'd have to come back then to pull value higher. Okay, let that think. Sometimes you have to go lower to pull value higher. Similar story. There was a range throughout the week. We gapped up late off of Micron earnings and then rejected back. So we're looking for the auction to trade on Monday across this range. So we're looking for 950 to the downside on Monday, especially if we get below that 20,075. Composite, the door is open to push lower. Then watch the bottom of this bracket. If that fails, then we could go test the prior monthly close and start making our way back towards 700. Could be a pretty big day post Powell. Okay, so could be meager before that, but that's the expectation for the NASDAQ. Let's go look at the Russell. Look at the monthly chart on the Russell, because it just illustrates how this product has really struggled after being in balance for quite some time, made a move, and then has just been essentially two really big prices, 2250 and 2050. We've been back and forth between those several times. 2250, kind of key for where we are. Watch out. If we can't hold these prices, we can rotate once again back lower. It was an inside week last week, so we're looking for a move from balance. So watch last week's high or low. Those are likely to go test the prior week's high or low. Okay, 2245-ish, let's call that, is going to be key to the auction. If we're below that, we're looking for new weekly lows, pushing toward 2195 weekly expected low. If we're above that, we make new weekly highs, we could push toward 2300 weekly expected high. All right, so, and if we only get to one side, we could certainly extend those. That's the field of play in the expectation. 2240. So we're balanced. the difference of the posture of the Russell versus the ES and the NASDAQ. We're more balanced, primed for a bigger move. Okay, and then let's look at crude. Looking at the monthly chart, we're going to close the month and quarter on the lows. One time framing lower for the month. We're balanced with 5-day and 20-day. A little bit below the 20-day, or a little bit even bearish below that. Let's look at this on the short term. You can see where we closed. We were below the 5-day and 20-day, so it's what we call a new bearish posture. We're in a more developing bracket, and that gives us the plan. If we're below, now the key pivot at, below the 5-day at 69.70, then we're looking for a test of the monthly lows. If we're above that, we can rotate back. We actually did not pull value for the week lower, so that's back up here at 71.25. That would be the magnet if we get above. So watch for moves from this 68 area, higher or lower to test. Makes it pretty easy in terms of what we're looking for there. Other things that I'm paying attention to and just watching, note the new posture in all of the treasuries. So let's look specifically at where they are, and this is on a monthly basis. So this is the monthly chart, but what I'm going to go look at is watch this 124. This is the 30-year. You could do the same thing looking at the 10-year. They've moved higher because they believe that rates are going lower. If they start moving lower, that means rates are going to go back up. That's not going to be helpful for this narrative of wanting to see rates go lower so equity prices can go higher. All right, so keep that on your radar. And then one other product that is going to be on my radar early to start the week is copper. Made a really big move. Let's look at this from a weekly basis. So big selling excess, looking for early rallies for copper to push back toward the 450 handle. All right. If it's wide enough, may be able to play a strangle around that. What's happening is that we're now in extreme posture. So what ends up happening is the auction has to go sideways to lower. That's that we got to go lower to pull value higher type of environment. Okay. All right. Well, as a reminder, this is all narrative, meaning this is the story that I tell myself. It's objective. I'm sorry, it's subjective, but I'm using it to help me be objective about where I am. It also means I got to know, what might change that and how can I adjust relative to that. All right. It sets the context for then where I'm going to look for playbook trades. And a playbook trade is a 4-question trade, meaning what's the opportunity or the target? So where do I believe I'm going toward? That helps me set the risk relative to that so I can keep that asymmetric, reward versus risk. What would tell me that I'm right? So once I place the trade or within any narrative, what would tell me that I'm right about this? That can help build confidence, but also what shouldn't happen? What would tell me that I'm wrong so that I can adjust and make a better decision? A couple next steps this week. If you're unacquainted with those 4 questions, you can go to TRADEWITHPROFILE.com/4 questions and find out more about those. Also see some examples of some playbook trades where we use those questions. Follow us on the artist formerly known as Twitter. If you want to have a one-on-one conversation with me, I set aside time every week to do that with developing traders, or if you're in a rut or stuck, you've got a strategy that's been working for a long time and is not, you just want an objective view of that and to get some simple concrete ideas. Happy to do that. All right. And then if you want to do some more intentional work, you can take a look at our pathway. That puts us ready for the week ahead. All right, gang. Hope this has been helpful. If something's been helpful, let me know in the comments. If there's something you'd like to see from these videos, let me know that as well. And watch your risk this week. Look for those opportunities. Have that narrative. So know what you're looking to do and where. Know what prices are more important than others. And then let the auction come to you, which is a way of you putting yourself in control over the auction, something that otherwise is random. And you'll do fine. All right. We'll talk to you next time. Peace.